Good evening, everyone. Greg here from MasterTrader. Thought we'd do a quick video taking a look at the markets ahead of tomorrow's Fed meeting, see where they're at. As you know, we've had a bias based on the oversold breadth that the market should move higher, as well as the trend being up in most of the broader market indices. The bottoming tail that we had here last week didn't follow through very much, and now we have the down day today, which there's some buying coming in, and formed a bit of another bottoming tail bar here, which I really like this setup for possibly moving higher. If it can get going doing that tomorrow, we'll see. Because a retest versus just a V bottom creates a larger area of support. And as you can see on the 30-minute chart here, that larger area of support you can see as a base. Now, in addition to that, the retest also forms a little bit of an area of resistance as well that you have to get through. But once it gets through that, you've got, as I said, this larger area of support that gives us a stronger bias that prices can move higher. So then the concept is a V bottom versus a retest bottom, and then move higher is a stronger reference point to initiate a move from. Same way would be, say, a V type of bottom versus a several month base that would support a larger move higher. Now, the transports, on the other hand, have been showing relative weakness, and that's a bad sign, along with the others that I pointed out in a letter last week on Friday morning's letter, where the transports were actually showing relative strength when we gave the November end-of-year rally call at the time on November 6th. They were showing relative strength, and here, while we're looking for a move up in the market based on oversold breadth, we've got the transports showing relative weakness. So while we're looking for some longs here based on the breadth, the transports tell us keep an eye on the exits here. It's not like an all-out screaming buy here, be bullish. We don't have that type of scenario where all cylinders are firing together, so to speak. The NASDAQ relative strength, we mentioned that, continues to show relative strength. We got a stronger looking bottoming tail bar today. Can we get through that? If we do, new highs should be easily seen, and so we'll see if that gets going tomorrow. And the S&Ps look like the Dow, the deeper retracement towards support, the attempt to move up, the pullback, and the same area of resistance to get over here. Now, we had one of the S&P sectors here. You can see here that where I'm scrolling here, this minder of the S&P ETF sectors, the only one that was green on the day was retail. And as you know, retail has just been an underperformer, where we got a bottoming tail bar there. And one of the ones that Dan and I were eyeing today and took a little position in was selling some $69 naked puts. So, here was the pullback here, a little rounding type of a bottom, and then it got the gap up today. And so the idea is that, that gap up being bullish, prices should not be able to come back through here. They might pull back into here, but by the time those expire, which was the end of the month, they won't get down here. So that's the thinking behind that, and we'll actually see what happens. Now, if the market can get moving higher, well, that should move along with it. So got a little bit of an island reversal type of a pattern here. Right? The gap down here, you had a bearish one. Right? How you had a gap down here was a gap up, which left that little island here, and now we had the gap down, and now with the gap up, can this hold the gap up and form a little bullish island reversal? Overall, sloppy. When you have gaps and overlapping bars, sloppy. So not something we'd be looking at to own the stock, but with the thinking, as mentioned, that it can stay above this consolidation here. Selling this 69 put should provide some income, and we'll see how that works out. Let's take a look at a few others here. There's a lot of bottoming tails. As we go down to the bottom of the underperformers, we had the oil sector, which, as you all know, excuse me, still getting over a cold here. The oil sector, oil has been getting shellacked, after the breakdown here in this long consolidation, and it is coming down towards some support. So now the sector here, which was the underperformer today, down almost 2.5%. We've got a bit of a bottoming tail bar, and what's there to like about this? Well, not the bottoming tail bar in of itself isn't something that likable. However, we had kind of like a climactic buy. There's a bottoming tail. Look at the volume. It fails. And it takes out stops, of course, those that are playing that counter trend move. So now it kind of cleans out the supply. And if it can get going here, and assuming oil can move up and now this sector can move up, well, we can then start looking at some of these stocks like RIG, which is interesting here, is it held at 200 MA. We've got a nicer looking bottoming tail. It's dropped down too, but it didn't break the low. Relative strength. So here's something to keep an eye on for tomorrow as a little counter trend move. And if it can get through this area over here, well, I'd be interested in that and, some intraday plays as well. Halliburton tends to be the weaker. And you can just go through these. Let's see if anything of interest here. Schlumberger, a little bit of relative strength, downtrend. So you're never going to hear us recommend these as a swing long since they're in a downtrend and they're not that extended. However, if they could possibly shape up where you might see us recommend a put credit spread on something like this, whereas we might look at this and say, hey, is there an opportunity here where we might be able to sell a spread down here as this possibly starts to move up? And does that make sense? Is there premiums here, enough premium there to do it? Something we take a look at. And that's the idea behind these spreads, and combining them with the patterns that we look at is that we find patterns that suggest it should be virtually impossible that they're going to move in the opposite direction of what the pattern is suggesting, and then find a options spread that could pay us with protection that should provide us with a high probability income type of trade situation. So even if this doesn't go up a whole heck of a lot, as long as it stays above this area, before expiration, we get to keep the money. So that's why we like these. So let's see what tomorrow shapes up to be. We've got the Fed thing, as mentioned, at 2 o'clock. We'll see how that plays out. We usually get the gyrations, and then things settle down, and so we'll see what happens, and then we'll update from there as it unfolds. So have a great trading day tomorrow. If we do get this out tonight, have a great night, and we'll be talking soon.